It's time for Charting Futures, our segment where we dive into the futures markets through the charts. Now, today we're taking a look at some of the risk assets, both stocks and commodities. Now, today we do have the S&P 500 recovering from a more than 0.5% loss earlier. That follows, of course, a big drop last week. Take a look at that one-week chart of the S&P 500, down 2.5%. But what makes it so interesting, the volatility. Before that, we had 2 up weeks. That follows 2 down weeks. Net, we are down more than 5% from the all-time peak. So again, lots of volatility for the S&P 500. In fact, let's take a look at it a little bit more in depth here with #BTV648. This is a longer-term chart of the S&P 500 in relation to its moving averages, and there was the big sell-off back in February, a rebound rally, and now we're starting to drop. The S&P 500 testing that 100-day moving average. There is some reason to think that this entire area of congestion could drop back down toward this orange line, well below 2,500. So now I want to welcome Dennis Gartman of the Gartman Letter. Dennis, thanks so much for joining us. And the last time we spoke, you had a really great call. You said that that was a dead cat bounce. What's next?
I think that was just simply a dead cat bounce. It was a livelier dead cat than I thought it was going to be. And I must admit, I'm a little surprised by how much strength we had today after the sharply lower opening. But I think on balance, as we looked at the chart a few minutes ago, we're heading lower. We've seen the highs. We're failing well below those previous highs, and what's important, we talked about this earlier, is that on the rallies, the volume is waning. On the tumbles, we're seeing strengthening volume. That's not how a bull market should act. That's how a bear market should act.
Okay, so this is the contract table on the E-mini futures for the S&P 500. So it sounds like you would be selling what, the front month?
I'd sell the front month. All the volume lives in the front month. Whether it's the bond futures, whether it's the S&P futures, you can tell by that screen. All the volume lives in the front month, and that's where anybody who's speculating should pay their attention.
Okay, so another great call that you had the last time we chatted.
I got lucky.
Well, I don't know. Better to be lucky than right. Wheat. We were talking about wheat last time. You said to buy it, and pretty amazingly, wheat is up more than, I think, 10%, 15% since we last spoke. So what's next? And actually, we have a great chart to show that wheat could actually go up to $6 or so a bushel.
I think it can go a great good deal higher than that if we really get things moving. What we have here is a problem, one, that we've planted the smallest wheat crop in 100 years, whether it's hard red or soft red winter. It's the smallest crops planted in the United States in 100 years. Two, you've had 2 weather problems, very interestingly. In western Kansas, the high plains of Texas, the high plains of Oklahoma, where the winter wheat crop has grown, it's been a drought. Move to Illinois, Indiana, and Ohio, where the soft red winter wheat crop has been grown, you've had floods. Very strange that you've had that dichotomy, both of which have been detrimental to the crop, both of which are therefore price supportive. What I really want to see is start to see the wheat futures move into a backwardation instead of contango. But I think you've got the makings here of a protracted bull market. As you can see on the chart, we've made it over $5, which is a psychological resistance point. We may get up to $5.50, but historically, if we took this chart back another couple of years, we were talking about it earlier, 7 and 8 years ago, we went to $11, $12, $13, $14 per bushel. Do I think that that's going to happen? No, but I do think higher prices are on the way.
So you are absolutely a buyer of wheat then, perhaps for that $5.50 even higher. Because when I look at this chart, it does look like we're seeing a breakout toward the upside for sure.
It does look that way, and it's not just the wheat that's moving. Corn is moving, soybeans are moving, and as I like to say in my newsletter, even though gentlemen do not trade oats, oats are the canary in the mine, and oats have moved to the upside. So when you've got all of the grains moving in the same direction, you have to pay attention. Plus the fact the soybean market has been moved higher by the real demand for soybean meal. The Argentine crop has been diminished rather dramatically. They've had a drought, whereas the same problem that we've had in the winter wheat crop, they've had a surfeit of rain up in Brazil, so that crop is being diminished. You've got something going on in all the grains here.
So you're a buyer of the grain complex overall?
Any weakness, I think you have to be a buyer. I don't think you have any choice.
Dennis Gartman of the Gartman Letter, great to have you here. Great call there on the grains and selling the S&P 500. Great stuff.